Yeah, good morning. So yesterday we saw some corrections in the US market, mainly concerning about the debt ceiling, which has become, as the date is coming near, it's becoming bit a concern and creating volatility, and as such has resulted into some decline in the US market. And taking clue from that, even the Asian markets are showing some corrections. Most of the Asian markets are down anywhere between 0.5 to 1.5%. And bigger concern is on the commodity, where the metals are seeing sharp corrections. Though the oil is up by around $1, mainly on account of something indicating that the short seller should be cautious, and that has created some budge, and that's why the oil has moved up by around $1. But the other metals are seeing sharp corrections. Steel is down by around 2%, and iron ore is by around 2.5%. And most other steels are metals, base metals are also down. So, so overall seems more of a weak day for today, and we may see some profit booking in India market as well. Now, request technical team to take up from here.
Yes, sir. Thank you, sir. Good morning, all of you. So, as we have seen yesterday's market, it was a more of a flattish move, and in the second half, we have seen a strong profit booking in Nifty. And even today, as taking the cues from the global markets, we feel Nifty is expected to open on a gap down node, and there's going to be a little profit booking session in Indian markets today. Whereas if we look at the immediate support point for Nifty, it is currently placed at 18,280, which is around the day before yesterday's closing point. So it is going to be a very important support zone. And once that is broken on closing basis, then 18,200 to 18,100 Nifty will be tested in the coming session. Whereas if Nifty again starts to up move, then tomorrow, then yesterday's resistance, which is 18,420, will again act as a very strong resistance zone for Nifty. And once 18,420 is broken in closing basis, then only we can expect 18,500 in the coming days. But it is going to be a range bound session to a slight profit booking session in today's scenario. So moving on to Bank Nifty, similar pattern was seen in Bank Nifty. It was a consolidation movement in yesterday's market. For today, immediate support for Bank Nifty is placed at 43,650. Once those are broken, then 43,370 to 43,000 levels will be tested. Whereas if Bank Nifty breaks 44,000 levels on the closing basis in the coming session, then 44,180 to 44,500 will be the strong resistance zone for Bank Nifty. Going up to Nifty Financial Services, it has given a closing of 19,425. The immediate support for this index is placed around 19,380, followed by 19,300. Whereas resistance is placed at 19,470 to 19,550 levels. Moving on to stocks, HDFC Limited is looking weak at current levels. One can take a short call in this below 2716. We have already initiated a short call for a target of 2650 by keeping a strict stop loss of 2745. So that's all from my side. I request Amit to take the call forward.
Thank you, Ayush. Good morning, everyone. So on the derivatives front, we are seeing that the Nifty is continuously facing resistance at 18,400 level. In yesterday's session, also we have seen that at 18,400 strike, the call writer positions got added up heavily. While in the last trading session, also on 15th and 16th May, also we have seen that Nifty managed to go above 18,400 level, but on the closing basis, it failed to give the closing above 18,400 level. So 18,400 is acting as an important resistance zone currently in the market. While as per the OI position also on the monthly basis for the next month also we are seeing that at 18,400 and 500 strike there is a highest call writer positions on the monthly basis, while on the downside we are seeing that there is a supportive base on the put writer also at 18,300 and 200 strike. So we expect the market to remain in the range till the further scenario, till the Nifty is holding the support of 18,000 level, because at 18,000 strike we are seeing that Nifty put writer is having the highest position, almost around 18 million position of put writer positions is being added at 18,000 strike. So till the time 18,000 level is not getting broken, Nifty is likely to remain in the range of 18,000 to 18,400 level. Once Nifty gives closing above 18,400 level, then the resistance which you are facing from last 2 weeks, it will get surpassed and the call writers will get liquidated on the upper end, and the positions will get shifted towards 18,500 and 600 level. So we have to wait for new positions to be getting created in the market for 18,400 level. In today's trading session, as we are seeing that the SGX is likely to open on the downside towards minus 75 to minus 80 points on the lower end. So we expect SGX Nifty is likely to open around 18,250 to 270 level. While in that scenario, we are seeing that 18,200 is still holding the supportive level. So we will hold the long position at the support of 18,200 level on the spot front. Once if Nifty goes below 18,200 level in today's trading session, then only we might create new short positions for another 100 to 150 point downside on the lower end. So that was a view about the Nifty. As per the stock specific and sector specific, on the stock specific front, we are seeing that the Metropolis, Infi, and Balkrishna Industry, these three counter has shown some short covering session in yesterday trading session. So we expect the buying to be witnessed in these three counters. While on the shorter front, we are seeing that fresh shorts which has got created in yesterday's session was L&T Finance, Intellect, and Alchem. These three counter we might see some profit booking in today's trading session also. So that's it on the derivative front. Thank you.
Yeah, good morning. NMDC had its result yesterday, wherein the result was marginally above expectation, mainly due to higher offtake and higher realization. Realization stood at rupees 4,700 versus expectation of 4,400. EBITDA per ton came in at 1745 versus expectation of 1625. Margins were more of in line with expectation at 37%. The stock is trading at EV by EBIT of 3.5 times FY24 earnings. Shree Cement had its con call yesterday, wherein the management indicated that the company was carrying higher cost inventory, which resulted in below expectation result. In Q1, the company will still be carrying some high cost inventory. So Q1 is likely to be flattish as compared to Q4. The cost benefit is likely to kick in from Q2 onwards. Demand scenario continues to remain robust, driven by infra and housing on account of higher government spending. Management has guided its sales volume to grow by 13% to 36 million ton in FY24, with incremental volume coming in from new capacities. Management is also looking to increase its share of premium products, which commands better realization. So the improvement in profitability going forward will mainly be driven by higher sales volume and input cost reduction. So the outlook is long-term positive on Shree Cement. Thank you.
Good morning. Ashok Leyland announced its result. The result was ahead of expectation. Revenue came in at 11,626 crores versus an expectation of 11,298 crores, which grew by 33% on a YOY basis and by 29% on a sequential basis. The volume for units sold this quarter stood at 59,697 units versus 47,562 units QOQ and 48,719 units YOY, as the government's focus on infrastructure development and a revival in replacement demand for commercial vehicles continued to improve sales. The RM cost inched up both on a YOY and sequential basis. EBITDA margin came in at 11% versus an expectation of 10.3% as against 8.8% sequentially and 8.9% on a YOY basis. The company's truck market share improved to 32.7% from 30.6% on a YOY basis. Bus market share improved to 27.1% from 26.4% last year. Ashok Leyland's domestic light commercial vehicle volumes grew by 18% in the quarter to 18,840 units. The CV industry is buoyant due to favorable macroeconomic factors and a healthy demand from the end user industries. This trend is expected to continue alongside growth in core sectors such as construction and mining, agriculture, increased capital outlay for infrastructure projects, and pent-up replacement demand. The stock is trading at a PE of 34.4 times TTM EPS. Thank you.
Good morning. CMS Infosystem has posted marginally above expectation numbers for the quarter, with revenue coming in at 501 crore, which is up 2.7% QOQ and 12.9% year on year. Even EBITDA margins have improved to 28.7% versus QOQ of 27.7%. Stock is trading at a PE of 14 times FY24 EPS. Dreamfolks has posted ahead of expectation set of numbers for the quarter, with revenue up 16.5% QOQ. Even EBITDA margins have improved and came in at 14.2% versus QOQ of 12.8%. Stock is trading at 26 times FY25 EPS. The call for the same will be held today, wherein the further details will be shared. Thank you.
Good morning. Sudarshan Chemical Industries Limited result was above expectations. The revenue grew by 10.2% YOY at rupees 691 crore. This strong performance in Q4 FY23 was on demand revival, where it observed 6% YOY growth in pigments business, both in domestic and exports markets, while inflationary cost pressures in raw materials and limited ability of pass through was due to lower demand impacted gross margins for the year. The EBITDA margin improved at 12.6% in the Q4 FY23 versus expectation of 10.2%. The stock is trading at a PE of 26 times to FY24 EPS. The Galaxy Surfactants Limited result was below expectations. The revenue degrew by 7.5% YOY at rupees 975 crore. The EBITDA margin reported at 13.8% versus the expectation of 13.7%. During the quarter, the total volumes were up by 0.6% YOY. And segment-wise, performance surfactants volumes were up by 11.9%, while specialty care products volumes were down by 7.5% on a YOY basis. The EBITDA per metric ton declined by 3.7% YOY and stood at rupees 24,460 per metric ton for Q4 FY23. The stock is trading at a PE of 26.2 times to FY24 EPS. Bikaji Foods International Limited also posted results, and results were marginally above expectations. The revenue grew by 15.5% YOY at rupees 462 crore, and the EBITDA margin reported at 13.4% versus the expectation of 10.9%. The stock is trading at a PE of 56.5 times to FY24 EPS, and there is a call scheduled today, so further insights will be shared tomorrow. Thank you.
Yeah, apart from this, Linde India has reported excellent numbers. The number sales has remained increased 18% year on year. The key thing is margin. Margin has improved both quarter on quarter and year on year. EBITDA margin came in at 29.5 versus Q1Q 24.1 and year on year 24.7. Though the stock is trading costlier at somewhere around 70 times TTM EPS, but consistent strong performance of Linde India continue to keep it strong in the coming period also. Apart from that, MSCC has come up with the numbers, and the numbers were has shown improvement. Both the revenue has increased by 16% quarter on quarter and remained flattish year on year. EBITDA also increased by almost around 38% quarter on quarter and around 2% year on year. So overall seems attractive considering the valuations are also at around 9 times trailing EPS. Schneider Electric has reported good numbers, and here the revenue though has increased by around 20% year on year. The EBITDA has increased by almost around 260%, or EBITDA margin has come at 15% versus quarter on quarter 10% and year on year 5%. So that result is comparatively strong, which has come. I'll request commodity team to take up from here.
Yeah, thank you very much. Good morning, everyone. In today's session, we might witness some pullback in gold and silver. Yesterday, we had seen prices uh, recovering from the lows of 59,700 odd levels. So one can initiate a buy around 60,000 and maintain a stop loss of 59,700. On upside, 60,400 to 500 is expected. Similarly, silver also 71,700 to 500 is a buying zone for a pullback till 72,800 and 73,300. One can maintain a stop loss of 71,000. Crude oil prices we have witnessed close above 6050 levels, and we expect prices to test 6200. So buying around 6070 is recommended, and maintain a stop loss of 6000. Natural gas might be supportive at 190 188 level. So buying in this zone and maintain a stop loss of 182. On upside, again, pullback can be witnessed till 200. So all in all is in a range from 180 to 200. Copper prices are expected to trade weak, and it might test 700 to 695. So selling around 712 is recommended and maintain a stop loss of 717. Zinc prices have also continuously drifting down, and we expect further correction. So 210, 209 is expected. Uh, so all in all, sell on rise is recommended in the metal front. That's it from me. I'll ask Utkarsh to take over from here.
Yeah, thank you, sir. Very good morning, all of you. In Euro INR, we witness a very range bound movement for last 3 to 4 trading sessions. So if the price is sustaining above the 89.40 levels, so one can initiate a long position for the intraday purpose for the target of 89.65 and 89.78 levels with a stop loss of 89.19 levels. In USD INR, for last 2 trading session, market has trading in a very small range. So one can initiate a short positions around if market sustains below 82.78 levels. So one can initiate a short position with the stop loss of 82.89 levels for the target of 89.60. In JPY INR, if my price is sustaining above 60.05 levels, so one can initiate a long positions with a stop loss of 59.85 levels for the target of 60.30 and 60.45 levels. Thank you.